Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Harley-Davidson reported earnings this week, and investors were a little bit confused about what to think about the company's results. The stock was down early on Thursday, but actually recovered and is trading pretty flat for the week. But I think there are some interesting trends here on what kind of products are being sold, what's being sold in wholesale level, what's being sold on a retail level. So that's what I want to dig into today. Even if you're not a Harley-Davidson investor, this is an interesting company to watch because it tells how much money people are spending on very discretionary purchases like motorcycles. My name is Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content, and let's get right into the numbers. This is the earnings release, and the numbers that pop out are really the company's 20% growth to almost $1.8 billion in revenue in the quarter, and net income jumping 37% to $304 million, earnings per share jumping 41% to $2.04. They did buy back a little bit of stock in the quarter. So on that front, it seems like everything's going really well for Harley-Davidson. But you dig a little bit further here, and there are some kind of surprising numbers. One is motorcycle shipments, and revenue from motorcycles was up 23%. So that means that price increases accounted for a very significant amount of the increase in revenue that I highlighted above. No surprise there, if you're raising prices, gross margins were up. But if we go down to the retail side of things, this is the retail segment, and this excludes Livewire. I'm going to cover that in just a second. But retail sales on a unit level was actually down 17% in North America, 6% in Europe, the Middle East, and Africa, and then just up slightly in Asia Pacific, down 25% in Latin America. So overall, a 12% drop in worldwide unit sales on a retail level. I'll cover why that happened in just a second, compared to the strong revenue and net income we saw from Harley-Davidson overall as a company. Livewire, now this is technically a separate company now, but Harley-Davidson does own a vast majority of the equity in Livewire. Again, things are not going well for Livewire, and I don't think that's going to change anytime soon. Revenue is $8 million, and shipments were actually down 35% in the quarter. Operating loss was $25 million. So $8 million in revenue and an operating loss of $25 million, that's just not a great sign for that company. Here's what I want to highlight about the change in sales overall at Harley-Davidson and what we saw on the retail side. This is the retail sales number, and then on the right is a chart of average dealer inventory. So what you see over the past year is that dealers have significantly more inventory than they had a year ago. Harley-Davidson accounts that when a unit is sold to a dealer, Harley-Davidson counts that as revenue. That's why revenue can be up despite the fact that end customers or retail customers are not buying as many bikes as they were a year ago. Eventually, those two things will even out, but you can see here that over time, there's a lot of fluctuation. And over the last couple of years, dealers have really cut back on their inventory. So inventory is still down from where it was in Q1 of 2020, but up sharply from a year ago and even 2 years ago. So that's why we see that big difference between the revenue that Harley-Davidson overall is generating and the unit sales at a retail level. At the end of the day, I think the trends here were okay for Harley-Davidson. The company is able to make more bikes than it was a year ago. It still has high demand, especially for high-end motorcycles. That was what management talked about, is that they're selling a lot more of the more expensive motorcycles than they were in the past. So that's a really good sign. Maybe they can increase those margins, but keep in mind that retail sales are actually falling. So a lot of the reason that results looked pretty good in the quarter was this short-term impact of dealers building inventory. That's one of the reasons that the market's reaction initially was fairly negative to the results. But overall, I don't think that should be all that surprising given the fact that we're in a tighter credit environment. It's getting more expensive to buy any sort of vehicle, much less a motorcycle. And we may see people cutting back on these kind of expenses as we have an economy that's a little less flush with cash right now. But the fact that Harley-Davidson is able to make a significant profit and actually buy back shares in that sort of weak environment, I think is pretty positive. So a little bit of mixed results, and once you dig into it, you can see exactly what the picture is. But what do you think of the quarter? I'd love to hear your comments in the comment section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. I'll see you here next time.